This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Casting a shadow, small cap stocks turn negative for the year. Why? And is it a sign the rally's momentum is slowing?
Astronomical meeting. Two of the most prominent figures in tax reform say they hope to have details on a plan next month, but a number of important issues are still being worked out.
Solar Fest. Business is over the moon for those in the path of today's total solar eclipse. But the sun is shining bright on Nightly Business Report for Monday, August 21st.
Good evening and welcome everybody to this solar eclipse edition of NBR. And that eclipse brought midday darkness and excitement across parts of the country. You could see the enthusiasm outside the New York Stock Exchange, where traders and tourists flooded the streets to look up at the sky. But inside the exchange, the light was muted. Trading was quiet, volume was light, but don't think for a minute nothing is happening in this market. New lows today eclipsed new highs. We had to do it. Some say investors are becoming jittery, even though the Dow and the S&P 500 were higher for the first day in 3 sessions. A closer look shows the indexes are being pulled back down to earth, on track for their worst month of the year. Today, the Dow Jones Industrials rose 29 points to 21,703, but Nasdaq fell 3 points. Meantime, the S&P was up a modest 2. But it is small cap stocks, the Russell Index, that is getting a lot of attention these days. It tends to start and lead declines, and today it turned negative for the year. Bob Pisani has more.
Stocks were mixed today, but the Dow is still on track to post its worst monthly performance since October of last year. You know, we've seen something we haven't seen in some time. We saw a sell-off in the last 2 weeks, followed by no bounce. That's strange. Traders just aren't buying stocks after a decline like they used to. Is this worrisome? We don't know. One particular red flag some market experts have been pointing to is the Russell 2000. This is an index of small cap companies. It fell into negative territory for the year right at the open this morning and is now down 7% from its all-time high. It hit just in July. The big cap S&P 500 is still up 8% for the year. So what's going on? Some believe it's due to leadership doubts about President Donald Trump and the ability to get his tax cut program through. The Russell really has been failing ever since the health care bill failed. That's an issue. So smaller cap companies tend to get most of their revenues from within the United States. They don't have the luxury of parking their profits overseas like a lot of multinational companies. They need the money here in the United States. It looks like some are now downgrading the hopes of pro-growth policies like tax cuts from the Trump administration. That may be what the Russell sell-off is about. Now, we'll see if that turns around in September, as the president and the Congress said they would turn to tax reform in earnest. There's a lot riding on this one right now. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
So let's talk more about what risks might potentially derail this market. Peter Mallouk is President and Chief Investment Officer at Creative Planning Services, and he joins us now to talk a little bit more about that. Peter, welcome, first of all. And second of all, Bob mentioned the corporate tax reform plan, and you also cite that as something that you're going to be watching very carefully.
Yeah, I think if you look at the risks to the market, we get a lot of questions from our clients about North Korea, the speech about Afghanistan tonight, and unrest in Charlottesville, Boston protests. It's really about earnings. And the number one thing that can impact earnings from these levels is not getting corporate tax reform passed. I think this is the thing that the market's looking at more than everything else put together.
Is that baked into prices today already, Peter? And if it looks like this tax reform plan isn't really reform, but is merely a tax cut, or nothing happens at all, how much is the market likely to decline?
Well, I think that when you saw Trump get elected and the talk about tax reform, you saw the market rally. And a lot of people attributed it to tax reform, but really you had a lot going on in the background. You had unemployment that happened to hit full employment right around election date, and you had a strong U.S. market the 2 years prior, and it continued through that year. So that was a big part of it. The other part is the market is expecting tax reform, in particularly the market's looking at a corporate tax cut. So even if it just gets the corporate tax cut, that's very favorable. And I think a lot of that's baked in, but not all of it.
What about tonight when the president addresses the nation about the Afghanistan situation and his plan going forward? Ideally, what would the market like to hear?
Well, I think the market really is looking, the market's cold. It only cares about earnings. So the most questions I've gotten since Trump's election has been, how's Trump going to impact the market? How is Charlottesville and things like that going to impact the market? North Korea, nuclear war, and now it's Afghanistan. And the market really looks at all this and says, all of these things have the potential to be disastrous, but they're not probable. At least that's how the market sees it. Whereas it looks at tax reform as that not passing is actually probable. A lot of things haven't passed that people thought the Trump administration could pass. I think the market's probably going to hear Trump's going to add a few thousand troops to Afghanistan, probably find a way for Afghanistan to pay for part of this, and the market will probably shrug its shoulders and go back to looking at corporate tax cuts.
So I want to come back to the possibility that tax reform or even a tax cut doesn't happen. You suggested that it's largely, if not totally, baked into current prices. If it doesn't happen, what is the downside risk to the market? Is it 5%? Is it more?
Well, if you look at corporate tax rates are at 35%, and I think that the talk had been anywhere from 25 down to 15%. Well, when you start to bake that into the market, that's dropping directly to the earnings line, and so it has an immediate impact on stock prices. Now, part of that has waned as people have become less confident in the Trump administration's ability, even with a Republican Congress, to get things like health care passed. But still, I think the market looks at tax reform differently. That seems to be one thing most Republicans can agree on. So I do think it's mostly baked in. I think if it doesn't pass, I think you are going to see a bit of a drop. I couldn't speculate how much it would be. It would probably be something like 5 to 10%, just based on the expected earnings just evaporating from what the market sees here.
Peter, thank you very much. Appreciate it. Peter Maluk with Creative Planning Services.
Thanks for having me.
As we mentioned, the president tonight will outline the country's new strategy in Afghanistan during a nationally televised primetime address. He is expected to announce a troop buildup, which put renewed attention on defense stocks. Some of the biggest ones are up a lot this year, easily outperforming the broader market, as you see there.
In deal news, Sempra Energy is buying Encore for about $9.5 billion. This after the owner of Encore abandoned a deal to sell the power company to Warren Buffett's Berkshire Hathaway. Now, that decision marks a rare defeat for Mr. Buffett, who made an attempt 2 months ago to buy Encore after 2 previous attempts to sell it were blocked by Texas regulators. Buffett had offered $9 billion for the company.
The Danish ship company Moller Maersk has agreed to sell its oil and gas business to the French energy company Total for nearly $5 billion. The chairman of Total recently said that his company plans to take advantage of relatively low energy prices to start new projects and seek acquisitions. This deal makes Total the #2 operator in the North Sea.
Well, deal activity is important to the market, and so is tax reform. It's one of the issues that investors hope will get pushed through Congress sooner rather than later, even as other parts of the president's legislative agenda have stalled. Well, today, Treasury Secretary Steven Mnuchin and Senate Majority Leader Mitch McConnell, 2 of the most important players in tax reform, made a joint appearance in Louisville, Kentucky to discuss the issue. Ilan Mui was there.
Treasury Secretary Steven Mnuchin and Senate Majority Leader Mitch McConnell appeared here in Louisville to talk about tax reform. But perhaps more important than what was said was how it was said. The Trump administration has been at odds with Mitch McConnell in recent weeks, but Mitch McConnell made clear here in Louisville that he has a strong working relationship with Mnuchin, at one point calling the Treasury Secretary an extraordinary individual. That relationship will be critically important for the 2 men as they get into the hard negotiations of tax reform this fall. Mnuchin said that President Trump still remains fully committed to that effort.
We're 100% committed to getting it done. I'd like to think there's bipartisan support or some bipartisan support. The issues that we're focused on, tax reform, are good for the American worker. They're good for the middle class. This is about making business competitive, and making business competitive is about making jobs.
But before they can get to tax reform, they have to deal with the debt ceiling. McConnell was adamant that lawmakers will raise it.
There is zero chance, no chance, we won't raise the debt ceiling. No chance. America's not going to default, and we'll get the job done in conjunction with the Secretary of the Treasury.
The 2 men headed over to Fort Knox after their speaking engagement, and no word they got to see the solar eclipse. For Nightly Business Report, I'm Ilan Mui in Louisville.
And it is that total solar eclipse that everybody was talking about today. It carved its way across the U.S. from Oregon to South Carolina, and in places across the country, people lined up to see something that doesn't happen very often. For some, it was the business opportunity of a lifetime. Jane Wells reports from Madras, Oregon.
They came, they saw, they wondered.
This is so awesome. Cool.
It is. The Great American Eclipse, for a few hours, united a fragmented country in awe. Some had been planning to be here for years.
It's a once-in-a-lifetime opportunity.
A once-in-a-lifetime opportunity which towns in the path of the total eclipse hoped would put revenues over the moon, including the tiny town of Madras, Oregon.
This is huge just for everybody that's here.
Corey Miller brought in hot air balloon operators from around the country to make extra bucks.
Our portion alone, we will end up bringing in close to $75,000.
So this is the one we have the special on, the Trainwreck Diesel.
Marijuana stores cashed in on out-of-towners discovering state-legalized pot.
I'd say Wednesday was one of our highest grossing days in history, and then as of about 2 o'clock this afternoon, we have doubled that.
Bayang Antonsen spent over $5,000 on porta potties as she was charging up to $150 a spot on her dad's farm for campers. Too much?
I've had to work through that. However, I think that's one of the beautiful things about America is that you can do things like this.
Madras's population of 6,200 grew more than tenfold as tourists came from all over the world. How much money have you spent to be here?
I don't really know, and I don't really want to know, to be fair.
But nobody complained.
There's certain things in life, it doesn't matter what you do, whatever money you've got, it's all about experiences in life and friends you make on the way, so and that's one of the reasons why I'm here. And
as soon as it ended, they all started heading home. But America won't have to wait so long for another total eclipse of the sun. The next one will travel from Texas to Maine in April 2024. For Nightly Business Report, Jane Wells, Madras, Oregon.
Still ahead, can't find a house to buy, why some are blaming the baby boomers.
Even in these dog days of summer, there is still robust demand for home buying. The trouble is, there's very little to buy, and one generation may be making matters worse. Diana Olek takes a look at why baby boomers are staying put.
Baby boomer Lorraine Goldberg loves her 5-bedroom suburban Maryland home, loved raising her 2 sons here.
They built forts, they had shows, it was just wonderful.
So this was and still loves throwing pool parties in her luxurious backyard.
I have friends come over, yes.
Well, that's good. Yeah. But now she admits,
I'm in a neighborhood by myself that really I don't belong in.
Her kids are grown and gone, and she and her husband divorced. After nearly 40 years here, she'd like to downsize to something more urban, but
it's actually less expensive to stay here and metro into the city than move into the city. I don't know what to do, and I keep calling realtors and driving them crazy, and so then I just stay here.
Realtor Brooke Heiberger says she sees this all the time.
I think the baby boomers are really struggling with the decision to downsize because there's not really great options for them to downsize to. Currently the trend is to live in urban centers. They want to be close to restaurants and shops. They want to have easy access to public transportation, but because the demand to live in these areas is so high, it's just become very cost prohibitive for them.
Baby boomers simply aren't moving, at least not at the rate previous generations did when they hit this age. And by staying in their big houses longer, they are causing a crucial logjam in the housing supply line. If boomers don't sell their homes, then those in smaller homes can't upsize, so they stay put, putting more pressure at the entry level where millennial demand is only increasing. All that demand with so little supply just pushes home prices higher. Baby boomers own almost 3.6 million extra bedrooms, according to Trulia, a real estate website. Goldberg has 4 of them. She continues to look for a new place, but she also visits her new grandchild on the West Coast, leaving her big house empty for weeks at a time. For Nightly Business Report, I'm Diana Olek in Washington.
And to read more about the impact baby boomers are having on the housing market, head to our website, nbr.com.
Competition may be intensifying for Nike, and that's where we begin tonight's market focus. The largest sportswear maker was downgraded to hold from buy by Jefferies. The analyst citing the popularity of its rival Adidas, which it says has been able to avoid the soft trends in the athletic shoe and apparel markets. According to the analyst's report, competition from Adidas could cap market share gains and margin expansion. Nike was the worst performing stock on the Dow today, off nearly 2.5% to 53.61. And shares of the other sporting goods retailers also dropped. Sales at Francesca's are weak, and they're expected to stay that way. The women's apparel and accessories retailer says its back-to-school sales got off to a challenging start, and its chief merchandising officer has stepped down. The shares plunged to a record low, off nearly 12% to 703. Hedge fund Camber Capital Management has taken a more than 5.5% stake in Tenet Healthcare. That's according to a regulatory filing. On Friday, 2 Tenet Healthcare directors resigned. Both of those directors work for Glenview Capital, which owns 18% of Tenet. The stock was up 14.6% to $16.56.
Herbalife out with a series of announcements. The nutritional supplement company recently held talks to go private, but the discussions ended last week without a deal. It also announced plans to repurchase stock valued at about $600 million, and it cut a deal with its biggest investor, Carl Icahn, who agreed to keep his stake below 50% unless he makes a move to buy the company outright. The hedge fund manager, Bill Ackman, has been betting that shares of Herbalife would fall. The stock rose nearly 10% today to $68.04. Meantime, Bill Ackman also trying to shake up the payroll processing company ADP. The firm today rejected his 3 candidates for the board. Last week, Mr. Ackman outlined his transformation plan for the company. The CEO of ADP called the activist hedge fund manager a, quote, spoiled brat. Shares of ADP dropped nearly 1.5% to 102.89.
Taxpayer money funds the Secret Service, but there are reports today that the Secret Service is running out of money to pay its agents. Expenses are high, and now it's up to Congress to approve additional funding. Eamon Javers has the details.
Secret Service officials said today that more than 1,100 Secret Service officers will work more overtime in 2017 than they are allotted under the law to be paid for. That means they're going to need a fix up on Capitol Hill in order to change the law and pay overtime to the Secret Service officers. In a statement today, the Secret Service initially said this. They said the issue is not one that can be attributed to the current administration's protection requirements, but rather has been an ongoing issue for nearly a decade due to an overall increase in operational tempo. But then they changed the statement, adding one single word that does seem to indicate the Secret Service believes that Donald Trump and his family require a whole lot of Secret Service protection due to all of their travel. They say the issue is not one that can be attributed to the current administration's protection requirements alone, but rather has been an ongoing issue for nearly a decade. In either case, a bipartisan group of legislators on Capitol Hill today said that they expect a legislative fix to come soon. So at some point, presumably, the Secret Service officers working here at the White House behind me will be able to be paid for their overtime. For Nightly Business Report, I'm Eamon Javers at the White House.
Well, we are 95% of the way through second quarter earnings season, with many of the big name companies having reported their results, of course. And now, at the beginning of the season, a little more than a month ago, we had Mike Thompson on the program to share his second quarter predictions, and he's back tonight to see how things have fared. He's president of S&P Investment Advisory Services at S&P Global. How'd you do, Mike?
I think we did a pretty good job. I think, Tyler, you may have done a little better than I did on the top line number, but I think we got it right for the viewers. Look, we said that technology and financials were going to be the leaders, and lo and behold, they were the leaders. Technology came out almost 21% earnings growth over the same quarter last year. And then if you look at financials, another good turnout there, 10.7%. over the same quarter last year. Very strong earnings. Energy, no surprise, 314% growth in earnings over the same quarter last year. Good stuff.
Is that unusual, that kind of earnings growth? Because I remember we challenged you a little bit when you gave us those numbers because they sounded a little bit rosier than others on the street. So as we look at these now, some of them came in even a little bit stronger than you expected. Is that typical?
Yeah, Sue. So yeah, I think if there's a surprise here, and what surprised me, actually was that the difference between the guided numbers going into the season and the end number, although they always tend to underpromise and then overdeliver, that they did it on a much larger scale. Usually you see 2-3% beat. That's kind of normal. This time we're well over 4%. Difference between the two. So that's one of the, I think, kind of the head scratcher here. It was a very strong quarter for earnings growth for U.S. companies.
Can it continue? Can it get better than this? Or have we hit a peak in this cycle?
Tyler, there are forces at work here that I think most of the professional investment community acknowledges are out there, but we haven't been able to measure them. And they come in the form of productivity enhancers through technology. I think we all know that we have technologies now that have changed the way we operate, and I think nobody realizes how it's changed the productivity of workers at almost all levels of this economy, and it's just transforming the productivity. People communicate much more often, the idea generation in certain industries, even the way you go into a store and you return an item, the amount of labor, everything has just gotten so much more efficient, and time is money. And, honestly, when you see technology
So that suggests that you think it can get better.
I do. I think we've had this for so many years. We've asked, how long can it last? And we say, well, there's got to be a finite end to it. It's not. Energy is a great example. Look at the way they've reduced costs through technology, improving new reserves they never thought they had, or even extracting gas or oil from shale. It's amazing.
All right, Mike, thanks very much, and we'll have you back next time around and see, put you to the test once again. Mike Thompson with S&P Global. And coming up, a far-out idea, how Volkswagen is looking to the past to make a big push in the future. Remember those?
The former General Electric CEO has reportedly emerged as the frontrunner to become Uber's new chief executive. According to Recode, a board vote is expected within 2 weeks. Mr. Immelt is still GE's chairman until the end of the year. Uber hasn't had a CEO since Travis Kalanick resigned in June, and the company has lost multiple other executives this year. Neither GE nor Uber have commented on the story.
A Chinese car maker is considering making a bid to buy Fiat Chrysler's Jeep unit, but Fiat Chrysler says it has not been approached by China's Great Wall Motors about its Jeep brand or any other part of its business. If the move were to happen, it would give the Chinese automaker a global brand. Earlier this year, that company's chairman said his goal was to become the top specialty SUV producer by 2020. That sent shares of Fiat Chrysler, I should say, higher.
Well, if you grew up in the 60s or the 70s, the Volkswagen bus was an iconic image from that era. From Woodstock to Scooby-Doo, the microbus captured the spirit of those days, and now Volkswagen is hoping to recapture that magic, but with a modern twist. Phil LeBeau takes a look at the updated all-electric van called the ID Buzz.
It's a blast from the past, planned for the future. Volkswagen's ID Buzz is an electric van hitting the street in 2022.
This car is for us a rebirth of a great heritage, but it will also carry into the future the mobility with all the electrification and the sensors, which will make the car fully connected and autonomous.
Volkswagen may pack the latest technology into the ID Buzz, but it's hoping the new van will carry the spirit of the VW microbus. Youthful, carefree, a reminder of when Volkswagen was cool. These days, Volkswagen's image is far different. The Passat or Jetta are fine, but they're not cutting edge, and many were diesel models caught up in the rigged emission scandal. In short, VW's image and sales in the U.S. have taken a beating, a fact the company readily admits while trying to turn the page.
Volkswagen is a brand which has a basis here. Everyone knows the microbus or the Beetle from the old days. So basically, I think people, they love Volkswagen. No, from the old days, we made many mistakes here, but now we try to make it right from the start. And I'm quite happy with the development over the past months, and I'm quite optimistic about this year and next year.
Volkswagen sales are still down compared to 2015 when the diesel scandal erupted and the company was forced to stop selling some models for a brief period of time. Now Volkswagen is hoping to regain customers by rolling out a slew of new models, many with electric motors. Phil LeBeau, Nightly Business Report, Chicago.
I always wanted one of those mini buses.
My first car was a Beetle.
And I learned to drive on a Beetle.
Yes, excellent.
All right.
That does it for us tonight. I'm Sue Herrera. Thanks for joining us.
I'm Tyler Matheson. Have a great evening, everybody. We'll see you back here tomorrow.
I almost stabbed you with my pen.
Yeah.